Welcome to the Breakfast Club. My name is Darren Hancock and it's October 21st, 2024. Welcome to the show. I hope you all had a wonderful weekend this weekend and you had a chance to enjoy your family and friends. Get to kick back, relax, kind of take it easy. It's a new week. We're getting closer and closer to the election, so we're anticipating the markets being quite choppy. As Michael says, we're looking for potentially new highs as they puff up the markets. The present administration probably wants to make the markets look really good, like they're doing a great job. And if you're a conspiracy theorist and think that if the other person gets in, the markets crash, they got someone to blame. Who knows? But politics always interesting. Let's have a look at what we got in the charts this morning on the 21st on Monday. Okay, here we go. Let's look for let's see where we're at for the day wise. So right now we're in this right in the middle of this high to low, the recent high to low in the last week. And you'll see we're pretty much sitting near the equilibrium of that range. We haven't taken out previous days. We're kind of internal inside this previous day's Friday's candle. So we got relative equal highs above us. And we have small little imbalance below us here. We've already revisited that once today. If we do end up reversing, going back higher, I do like the idea of going higher, taking out these relative equal highs here and getting through this 1 hour fair value gap that's above us. Don't know, we're going to see how Monday settles in and get an idea of how the week's going to settle in. Right now on the hourly, I'd like to see us get above these two candles here, get some support off of those. If we do come back inside this candle in the last hour and look to go higher, you want to get above this level here. We have the new week opening gap just above us. And new day opening gap at 447. So we'll see how the regular trading hours sits this morning. But right now, I like upside. We can get down into 382. Find some support at 382. Go higher. We're going to get through this candle here on the 15-minute chart. Right now we're in the middle of this range, so I'm not touching that. We're in a premium, so I'm not looking to touch that until we get back to a discount. Or we find a great opportunity to go longer if we're anticipating this run above the highs here in on the daily. If we're looking at these highs, then we're looking for an opportunity on the hourly to get above here. Let's look at Bitcoin. Did really well in Bitcoin this weekend. I think I did another 5K run this weekend, 32,000. So I had a killer weekend practicing on Bitcoin. I like to practice every week. I can practice every day when I'm here with you folks, and then I like to practice on the weekends as well. Bitcoin's the only one that's really trading regularly, like 24 hours a day. So it's a great one to practice on. So where are we at right now with Bitcoin? I was going to put a little box, so this would be the downside box that we're aiming for. We can get through these 3 candles here on the downside, look for this box and see how we act inside that. If not, I do like this area of interest right now. And if we can get through that, then look for a run below these lows and take out this low here. And then we'll start digging into this box. So looking for downside. If we hold off of this order block here, we just come back and fill the rest of that fair value gap in here and start to react off that. And I'm looking for these relative equal highs to get taken to continue to the upside. Let's see where we are. S&P 500. S&P very similar. I want to see us get above this candle here. Otherwise, this was the best entry right here right now. And then this candle. So we're still looking for higher prices right now. Still looking to push higher for S&P. I don't see any immediate rollover available. Keep your eyes on 5896 to 5898. Gold, what do we got in here? We finally hit our natural gas downside objective. We hit it, went through it. So now we're on the other side of it. We're looking for these equal lows to get taken now. Natural gas, unfortunately. We've traded below it, came back inside it, looking for a continuation on the downside. And then there's this gap sitting down here in these equal lows. So we have lots of natural gas on the downside. Gold still on the way up. I'll have a look at that in a second. REIT looking good. All right, so we've hit our downside objective in soybeans. Last week, we had a reaction off of that. Now we're sitting right inside this daily fair value gap. Now becoming a reclaimed. This is like a reclaimed. I think I want to give you guys the right definition of these things now because it's important. We're going to follow Michael's stuff. I'd like to make sure you guys are getting the accurate. So this is just a fair value gap that was claimed to go bullish. We trade through it. It now becomes an inversion. So if we trade through it and back into it, then it's a reclaimed bullish order block or bullish fair value gap. Right now we've traded through it and back into it. So that's an inversion. We're looking for this to continue going lower now. And if we can get through this one more time on the downside, we're looking for these equal lows below us in soybeans and wheat. We're still looking for wheat to continue going lower, looking for these equal lows and downside objective here. Could go either way in sugar right now, so I'm flat in sugar. Wouldn't touch sugar right now. It could go higher or lower. If we lose the constant encroachment of this candle or this box here, I'd say we're going lower on a close, that is. And if we can get above this mean candles or this candle's mean threshold on top of these highs and use these highs to go higher, then I'd say yeah, really we're inside this large range and you're sitting right inside the consequent encroachment or the equilibrium of that large range. So I got nothing for you in sugar. I'm not gonna. There's a few things. So we'll wait and see what Monday kicks off for us, and we'll see where sugar goes. Coffee, we're still looking for coffee to get that back down into this level here. We got to get through this fair value gap on the downside before we continue going lower. So far, this is the next price leg we predicted from last week. We predicted this last week, so I'd like to see that get us down below this level. Take out these lows one more time, and we'll see. Yeah, heading for here. That's where I'm looking for coffee. We've gathered up some of the strays, and we're back into that fair value gap again. So cattle still. Cattle in the barn, nothing going on there. Cocoa, we've had a nice reaction off of here, looking for these equal lows now, and then eventually running for this box down below us. Still flat. Lumber is lumber, and we got the biggies are doing nothing too. They're flat. I got nothing for you in pigs except for maybe. We'll see how today acts. I think I'd like to see this come back in here, find some support, and start pushing back into this gap again. We'll see how it acts today. It's got to get above this candle on the close, then circle back into here, go higher. Or circle back into here first before taking that high, and then go higher. That's what I'd like to see in the little piggies. And the gold. Gold. Remember these levels we're talking about on Friday? We wanted to see those hold. Talked about this, want to see it hold or go through it. And when it held. There's nothing in here. Still going higher. Still more upside for gold. And Craig's probably waiting. I don't know if Craig's on the channel yet. I haven't even made sure that we're even live yet. Hang on. Yes, we are. 4 people watching. It's because ICT's on this morning. 4 people have already figured out how the markets work and they don't need me anymore. Okay, so oil, we've got a nice little return to 68.32. Highs were taken. Haven't got a commodity above here yet. Trade through it. Right to it. You want to see that start climbing out of here now. I'd like to see us climb up here one more time and use this order block to go higher. We'd really have to break this candle's high on the close, start pushing higher above these highs to go higher. If not, if we close below this level right here in the next, oh, that's just today. So we've got a bit of a lift already. That's good. That's a daily candle. So if we get this if we get above this candle here, that's another day or so away yet. Maybe today. Let's have a look at the hourly. We're dropping back into this candle. I like that. I'd like to see us get back into this old high here. get a little discount first before going back higher. We just cleared that high. So anywhere loading in on here to go higher and take out these highs. Adi, good morning. Dave and Campione, good morning. So oil, I'd like to see oil. I like to see oil come back into this range a bit more. Get a nice, pick up a nice discount. Even if it's back into here. Get us a institutional order flow entry drill. Would have been nice to see that come back right away and give you that to go higher. But either way, I'd like to see it. We'll see how it acts inside this fair value gap here. And if we get back up on top of that order block again, and you find support at this fair value gap, then I'd like to see that push higher. Swissy cleaned our objective. All the bodies are still sitting there now. We want to see this, find support off this order block and continue pushing higher. If we take out this, if we drop below here and start digging into this fair value gap one more time, you want to see just leave a portion of it open to continue going higher. Yeah. Ideally, I'd like to see this candle hold price and keep pushing higher. Swissy. Wayfair, we said we call Wayfair down. Right now, it's bearish. We got to get below this candle here to continue going bearish. Otherwise, I'm flat on Wayfair for a bit, but more 51% bearish on Wayfair. So let's get back into the 1 hour. We're looking for, again, a run above here. I like the fact that we've closed above here. Come back, found support at that. No, support is 394. And so far this low is 396. It's a weight game for me. $709. Lindsay, good afternoon. Good morning, good afternoon. Where do you hail from, Lindsay? You must be on the other side of the pond. I think we're all in morning time here in North America. Okay, 15 minutes. Looks like we've already had our entry right here. This one ran above. I'm gonna wait for something cleaner. Morning, Abs. Ollie, how's it over there in merry old England? Was having a chat with my cousins this weekend. They're all excited about their new house they're buying. Buying off of a football player. Never mentioned who, though. Footballer. Must be a Portsmouth somewhere. One of the Pompey boys. Could be Southampton, I suppose. Well, Mehmet, good morning. Darren, I'll be out of the markets today, but wanted to say good morning to you. Have a nice session. Well, thank you very much, Mehmet. Have a lovely day. Have a lovely day, sir. Thank you very much. Herman, I am from You're from Portsmouth? I'm from Portsmouth, mate. I was born there many moons ago. Welcome, Herman. So now, Herman, you're one of my favorites now. Yeah, my family lives down in Fareham. Lots of family live in Fareham. It's starting to get cold. It's starting to get cold. We got frost on the ground this morning. It was like -2 or 3. It was kind of chilly on the feet this morning when I went out for my meditation in the backyard. Hilsey. Oh, the Hilsey Lido. I do like the Hilsey Lido. You're from Hilsey? Oh, neat. Yeah, these equal highs here look good. I was hoping the hour would give us this low. What is this low here? 3945, 396. So didn't quite give us this on the hourly. There's a little pop back into that level, but we're not finished yet. We may get the next hour, run back into this level, run higher. We do have it on the 15-minute, but again, that's above the 50% of the range, so I'm not touching it. But if we do get a run up there above these highs, that's a nice place to see if we'll get some support. You want to see a big bold candle get through that. There are some works on the Hilsey Lido at the moment. Huge investment. Oh, really? There's a on Portsdown Hill, there's a guy there. I remember years ago, his name was Mick. He had Mick's Monster Burgers. He used to go there for Mick's Monster Burger. And he's still there. When I went back there a couple of years ago, he's quite, yeah, I think he's got a sea can all set up there. He's like a permanent residence up on that hill now. But we still, I remember when he first had this little tiny, like a little camper with a hole in the side, and he was selling mixed monster burgers, like a fried egg, a burger, had bacon and everything on it. It was delish. Early in the morning, that's the best place to go is up on the hill for a mixed monster burger. Morning, Edgar. Morning, Edgar. Ooh, still here. Love it. Cheesy chips. Oh yeah, the cheesy chips. I forgot them. 24/7. It's just like an assembly line now. You just rip through there. I was up there. I kept telling my cousins I was back years ago, maybe 3, 4 years ago, and I said to my cousin, "Well, I got to go up there." He says, "Oh, we never did get up there." And then 2 years ago, I went there again, and they were like, "Oh, we'll get you up to mix monster burgers," and they really didn't feel like having a burger, but I kept whining about it, so we ended up shooting up to the top of the hill, get our mixed monster burger and cheesy chips. $7.16. That's a good strange coincidence, eh, Herman? But how old are you? Are you one of them young guys, or are you an old fart like me? We used to go to Portchester Castle, and we used to play in the moat. People didn't understand that when I came to Canada. They say, "Oh, I used to play in the moat. I used to catch crabs out by the ocean there. You take a little bit of bacon, you drop it in the water, you can catch a ton of crabs." And yeah, we used to play in the moat in a castle that was like 1,000 years old. Well, not 1,000 years old. I don't even know. That was anyway. Henry VIII. It was back in Henry VIII's time, long time ago. So it's funny in Canada, they can't appreciate old till you've played in a moat as a kid. Well, I love a good castle too. Here's a trivial question for you. Why do all stairways go downwards, backwards, like counterclockwise? Because people who are fighting with their right hand, because most people are right-handed, when they fight like that, they can strike down at you. And those people that are trying to strike up with their right hand keep hitting the wall. They can't quite get a good swing on you. So you can always hack down on them. That's why the stairwell is always wound counterclockwise going down. 718. Morning, Russell. My house is from the 1850s, older than Canada. I know. They we think that all my house was built back in the 80s. And we're not talking 1880s. It was built like 1980. It's like, oh man, my house is old. But ours is made of wood. I used to work with a guy named Gus Chio. And when I was 18, I was back in England working, doing property renovations. We'd strip all the wallpaper off because you know with the Brits, they don't just take the wallpaper off, they just right over the top of the old stuff. So there's like layers and layers of wallpaper. We'd be ripping down laughing plaster ceilings. Went out to Shanklin on the Isle of Wight. He had a house out there. We did some renos on. Back in the day, £2. I think it was like £2 something an hour. And my uncle said, "Don't work too hard. Don't work harder than everybody else. You'll piss people off." I was like, "Saw that. I'm there to work. I'm working." Like, "You'll piss people off if you work too hard. Get, they want to sleep." Like, I don't care. I'll work at my pace. It's quite funny. That was a lot of years ago. 40 years ago now. Sheesh, the bibble. Anyway, let's get back to this. There's nothing here yet for me. This was really nice kind of this morning. You got this consolidation. We finally break out above the consolidation. CAM model 1 entry for a long. As soon as you break out above this high and you get a return to it, that's a nice little entry for continuation. And we're sitting right here right now. Craig, good morning. Did you get the oil chat? You probably just got here, didn't you? Missed it. Anybody get in on that? Not very many people, I shouldn't say. I know not many of you got in on it this week. But this weekend's practice with Bitcoin on the Telegram channel, man, it was so beautiful this weekend to practice this stuff. We did this is all the Bitcoin stuff we were doing this weekend. We're trading both sides of it, up and down. We caught some really nice runs this weekend. Yeah, it was fun. So it's good practice. You know, stay. You should always be practicing your price action studies all the time, every day. You get better and better. What was trading crude oil on a long side and green for the day and long UNG. We have we have this. There's 2.5 will put us just above here. And 4 will put us right back near the Friday's new day opening gap. No, Friday's initial presentation. If we get support off this candle here, old highs, find support off of here. You want to see it get through these candles here now and get up on top of the magic box. I would have put in probably somewhere like there. And if that one gives way, I have another one for you just above that. Just looking for a potential reversal. So we're looking at the 930. If 930 just runs up, cleans these highs out, and we get a nice clean reversal here for continuation on the downside. If we do continue to run through this, then I'd like to see a nice good setup for a long for all this high above us here, the buy side liquidity. We got to get through these candles here on the hourly for that though. You're long on UNG as well. I'd probably hold off on going long yet. See how we've dropped below this level here, and the key is, does this level hold price and we go higher, or does this level now support price to go lower? And we've got equal lows below us. So UNG, we're looking for it to go lower, and natural gas, I'm looking for that to go lower below this low here, and then start digging into this piece here. Was that locked in place? Unlock. I don't see anything in there. That's, mind you, that's just daily. I'm not looking at anything on the lower time frame. So if you're looking at this, it's a really good discount area. So even if you run back up into the average of these things, if you see how it just keeps running back and forth, if this even runs back into this candle's high here, that's 20% return on your money just into here. Or even this old low here, you know, if you can get that at $12 or $12.69 or whatever, and you start getting back up into here. If you bought this long here now, $13, you're going to get 10% out of that anyway, even if it's just a return back into this old low here in this gap. And eventually it's going to get back up there again. Oil, I want to see oil supported off this level right here now, and I want to see that start climbing higher. I want a discount in here first, or I'll just wait for another support off the top of that. Looking for support off of here to go higher. It's not a really strong reversal or a break in structure point, but it's a start, and ideally you'd want to see it get above 70, 68, find support at that, and then start driving higher. This is a nice little reversal here. Bodies are relatively close to respecting that. They drop down, so you'd want to wait for that high to get taken. As soon as it does, then I want to see a return to this high, and then look for that to go higher. Okay, so now the next one above that is up there. Good morning, Sir Derek. How you doing, buddy? Look for these run to this liquidity above the market now. We've got 730. This is good. This is all done now. Which ICT concepts are you mostly using 2022? Nope. No, I'm a fair value gap inversion kind of guy. And I've got maybe a dozen different entries I can use. If I see them, I'll take breakers on fair value gaps, the 2022 model. That indigo trade he talks about, where you have an equal lows taken, creates an order block with an imbalance above it, come back, find that some supported an imbalance, it can start going higher. There's not much, he hasn't really defined much more than that. Using the unicorn trade, there's a whole bunch of different types of trades you can use. I prefer looking for breaks in market structure support with a fair value gap inversion, and then I like to use breakers a lot. See how we ran the highs out here now? Now we're looking for a reversal. Yeah, I like to look for hourly highs and lows as an objective. So see how we've hit that, took out these highs, and we're snapping off of that. But we want to break this low here, this structure here. So this would be the classic type thing, right? We have a fair value gap right here. We have a breaker right here that runs and breaks all that high right there. We have a low, a high, and then we finally break that high. We return all the way back to the initial presentation on Friday. But we have not broken this level. So not a reversal yet. And we have no body that trades below here, so we're still going higher. Michael is suggesting Friday's close as a morning target. Friday's close as a morning target. That's 494, something like that, isn't it? Right here. This new day opening gap. That's what's the regular trading hours gap. Yeah, I like that as an upside objective.
Order filled.
Oops. On the 15-second chart. See its lows taken here. And we've got back into this little return back into here to go higher. Ideally, you want to see the structure break to the upside and then start looking for a return back into this regular trading hour gap from the open here to the high there. Oh, we've already hit the consequent encroachment already. We'll see if this level holds price. Look for regular trading hour gap here. I don't know why this thing's not, it should be marking the regular trading hour gap, but it's not. Let me just double check this. Include opening gaps. there and right there. So we've got a nice bold candle going above. Let's see how yeah, I caught a, I've heard my trade come on as soon as I hit that 15-second reversal here. And then I just trailed it up to here, and then it just took me out there. I wanted to see this hold, and it just drove through it. So I got from here to here. That's 40 handles. That's all right. It's a quick early morning. It's on Monday. The indicator does not show it went on. Show it went on regular trading hours. Ah. Thanks, Dave. So see how we've worked right back up into the new week opening gap up here. Just shy of filling in today's objective. We get back into this open here, or the consequent encroachment, and see a reaction off of that inside this range. Then you'd like to see it continue pushing through for the upside objective there. Right now we've got a little swing going on here inside this range. This low has to get taken for me to consider going lower. Right now we're just looking at from this range high to low inside here. Pull your fib tool on that and you'll see where you're sitting in the middle of that range right now. Just under 50%. So you want to see that just clip in this here. Now you want to see that start pushing higher. or not. There's 62%. See how we act off this little imbalance, or this little bearish candle here. If we take this low out, then that's becomes interesting. I like that idea. Right back to a cam model here for his small consolidation. Cam one, and you're also looking at optimum trade entry reversal. So you want to see it get above here now, start pushing higher. Hello, Curry Fishball. How are you, my dear? Did you have a nice weekend? Russell's like, I have mine at 9:35 on the 1 minute chart. Yeah, if I go to a 1 minute chart, you'll probably see it different here. That's the 1 minute chart. Now you want to see it. This is a nice little, creates the gap, find some support at it, push through here now and start reaching for that daily high here, or that new day opening gap high. So that's the one you're looking at, Russell, correct? Okay. I'm waiting till 10. Went long. First Fairback live swing. Good 12 hours. Price 50% of the current PDA as well. Yeah, I went long off of here. And I'm moving my stop loss into break even, so, or a little bit. It's paid for my trade anyway. Looking for that fill just above us. Current range change. I'm aiming for the high of the open range gap. Yep. That's where I'm aiming. My take profit sitting right there. .15 chart. That looks like you want to see this all the way down into here. A little imbalance. Gold price. Just swinging in here. Leave that little piece open. It's a tiny little imbalance there too. You want to see that just come back, continue pushing higher. I would actually like it not fill the regular trading hours kept just under, just going to take out the lows. Let's go, Dave. Good morning, all. Good morning, Shepard. Someday I'll get the Bitcoin action on the weekend with you guys. Yeah, it's a lot of fun. Dave trades it like a demon, man. He's good at that. All right, make it happen. Make it so, number one. Make it so. Someday I'll get to it. Good morning, all. Good morning, Tristan. Programmer. Morning, Tristan. Dave, woohoo. Sounds like great practice. It's awesome practice. It is tons of fun. Oh, come on, just give it a kiss, man. Haddy's out. Nice long, nearly there. Crushing the market makers this morning. Theta and his posse. That's right, Russell. Nearly there. Come on, curry fish. We gotta make it. Gotta hit it. You're gonna hit it. You know you gotta hit it. I may order a curry fish ball someday. Dave's gonna be like, I told you. I told you it was coming. Just I didn't want to fill it. It's nice. I can confirm that. 950 macro for the win to close new week opening gap. Just know if the bodies just sit on that and just fail to close it and they just roll over, then Dave's like, I told you so. That's exactly what I was looking for. Yeah, mine stopped out exactly. I was reading this order block here. I didn't want to see this consolidation get taken on the downside, so I'm out. What new day indicator do you use short time? The new day indicator, I have my new day opening gaps. I use new week, new day opening gap, regular trading hours gap by, I don't know who that's by. Indicators, new day opening gap, regular trading hours. This Rage Harder is 864 or 846. That guy. Now I want to see it get above here and then run through that. There we go. Finally. What about ORG? 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 I don't know. I don't know if I've used org. Only hit 491 daily wick. Darren, how do you like DR? Daily range, internal daily range strategy. I like that. I like the looking for daily range highs and lows. I like the hour as well. So I'd like to see this structure get broken to the downside if we're going to go all the way back down again into this candle here. We're going to start reaching back down into here. I want to see a return to these old highs first. And in order to do that, you need to break this structure to the downside, and then I'd be looking to get back into here for a quick short run. But if we're looking for up range stuff, we're looking at all this buy side liquidity above us here still. So here I'd like to see a return to this consolidation. This would be a cam 1, 2, and a cam 3. So it could come all the way down inside here for a cam 3 model. Ideally, I'd like to see a cam 3 model for the best discount price available to go higher. And it looks like you're coming into it right now. I'd like to see that bottom piece just stay open now. See the bottom of this fair value gap stay open. If not, I wouldn't want to see it get any lower than this candle's body that we're dipping into there. That's a nice cam 3 model, I think. Cam 1, Cam 2 would be there. Let me just double check this. If you take it off the bottom there, that's a Cam 2. Take it off that bottom, it's still a Cam 2 with a wick. Cam 2 and just short of a Cam 3. Now I want to see it get above there. There's the ideal entry right there. I think that's your Cam 3 there. Sorry, we were just shy of it last time. Let's see where we get this time. There you go. There's your 50%. And now you want to see that go higher from here. I want to retrace now. I can't get in too high. Is a certain high market maker sell model. 11 a.m. reversal, just in time for 11 a.m. reversal. If you want 11 a.m. reversal, you've got to get above or get below here. If we're gunning for these highs here, it's the next buy side liquidity. So we have a reversal going long, and we have a reversal going short, but we have not traded below it yet. So, well, we have traded slightly below it here. So I'm flat. I'm not doing anything. I'm out. I took a small little win in here, and then it could go either direction right now. Now that we've taken out this weekly high, we've come back into this order block here. 10 a.m. It's 10 a.m. now, so we could still make a big gun for that high now. I want to see it get above here, find support at this, and go higher. See how we're not closing above it yet? I want to see one more close above that and find support here. There, let's just closed above now. $47. You can run all the way back into here. I like this little support here. Back into the consequent encroachment. I like to see this continue working its way higher. You want to see a bold candle come up here. Use these guys as support and use that as your silver bullet entry for a continuation on the upside. Or you want to see this side get broken on the downside with a silver bullet entry for a short, if you're a short. That's what I'd be looking for. Oh, see that just keep lifting off now. Get some really aggression here towards this 529. That's my next objective, 529 is these equal highs here. I'll pay myself at the rejection block, or at least move into break even. Moving into break even there. Now I'm looking for those highs to get taken. We've taken out this high. There's a small little imbalance here. If we take out this low here, then I'm looking for a short. Now we've traded below this. You see that? We're still inside this. So I want to see this taken on the downside now. We're still inside this. We're going higher. We get back through that level there. I like to see that find some support about here. Keep pushing higher. There you go. Dust it. Okay, so now you want to see it. I want to see a reversal now. Okay, so these highs are taken. A nice little reversal here on a 15-second chart might be nice. If we do get a continuation, I'm out right now. That's it for me. I'm moving to the side, and I'm going to wait now for a decent, what was it? Somebody said an A plus setup. An A plus setup. An A plus setup for me would be below here. Breaking structure, get back into this new week opening gap and start using it to go lower. If we are pushing higher, if they're literally looking to push up to old highs, rejection block here. If we use this candle for support, we find the 516 as a support level and continue to push through this candle's wick. Look for rejection block 2550 and so on for an old high, and then look for a continuation. Make this election look like it's being manipulated. The markets are being manipulated for election purposes. It's a quick scalp. See how we find this fair value gap here? We want to see structure break on the downside. We didn't. It came back inside. That would be the ultimate long right there, or right here would be the ultimate long. And we called that when it happened, and then we wanted to see it get above that level. It did. Found support inside it at the consequent encroachment. Came back one more time to tap inside it. Then we went higher, hit the objective. Now we've hit the fair value gap here on the hourly. And now I want to see if we get some sort of reaction out of here. Don't throw away your profits if you've got some. Keep them in the bank. That's about as nice as price action comes, in my opinion. Yep. Caught that push. And out of Asia's high. I think I'm with you, D. Been too good to give back. Yeah. Like I seriously want to see a nice little distinctive. We've done our high now. I've ran out all the liquidity here that wanted to go lower. All that has been building up in here. It's just been run out. And we're right back into the consequent encroachment, or sorry, the mean threshold of this candle. The last up close candle. See how we've hit the high of it? Like right there, that mean threshold. It's beautiful. And it's like to the tip. And now I want to see a nice reverse here. So in order to see the reverse, the body is traded below here already, and we're trading back up inside it. So I wouldn't want to see this get traded through this mean threshold. I want to see this start to come down from here. Some levels I got are 552 daily, SIBI, consequent encroachment 595. $552. We've got this Thursday's initial presentation. If we run up into that, I'd like to see how we'll react off of that. Price just hit the consequent encroachment daily bearish order block candle. I had the same thing marked on my chart. Nice. Nice, nice. It's nice when people all think alike. It means we're all seeing the same thing that Michael's been teaching us, right? 56 people. Holy smokes. We got 56 people in here, Derek. What's been going on? The word must be getting out. Thanks, John. Now sitting patiently and watching price action. Zero stress. Don't stress over trying to push super high. Wait for a good setup. If you're looking to go higher, you know, you get the bear or the bull flag sitting right here right now. This could be a great bull flag failure. So, or it could just push up into this new gap here. We can wick up. Don't forget wicks can do the damage. We'll see where the body ends at on the hourly, but we've already wicked up into that. So I'd like to see this really start rolling over now. Get below this level. See how the bodies are still inside this little tiny imbalance right here. If I stretch this out, you'll see it sitting right there. See that? You always got to look for those imbalances. And now you look for wicks, and Michael's really been pushing a lot of wicks in this 2024 mentorship. And as you can see right now, it's just wicking both directions. And it's in a 15-second chart, and you're seeing this kind of chop or slop. Just wait for your setup. Don't give it all back now, man. That's what I want to see. Come on down, brother. Love the double D's, triple D's. I like to think of it as dads. You got the Darren, the Dave, the Abs, and the Derek, the dads. We're pumping up likes and comments. Get the YouTube algo going for you. That'd be nice. I think I have to break 1,000 people, and I think I'm close. 963. So if you like what we're doing here, by all means, hit the like button. It's much appreciated. But some people, it's a very sacred thing, that like button. It's hard for people to press it. I'm not pushing it unless I really like it. It means a lot. So we want to break structure to the downside and use this as support. But remember, we can still pull way up inside that range here. So your stop's still going to have to go above this fair value gap here. Look at this range that you're in right now. I always pull my fib tool inside a range. Whatever small little range I'm in, you take the high, the low, and if you've done a little retracement, which we wanted to see it get below here, it has finally got below us there. Now, if we return back into the consolidation, CAM model 1 entry for a continuation on the downside, we have taken some lows out, so you have a reversal here. If you take these two candles here on the upside, we're going higher. So again, you have to ask yourself, what am I playing in here? I've went down to an optimum trade entry reversal inside this small range, and that's an optimum trade entry reversal, perfect for 70% for continuation. See how we're running above this now? There's a reversal, so I can argue both sides of it. So do you take a trade doing that? No. I wanted to see this, but I wanted to see us get below there. We didn't. We simply retraced back into the consolidation again, and we're through a CAM model 2 on a close, so we're going higher. Or let us see here. Hang on a minute. Hang on a minute. There you go. We're going higher. How did I know we were going higher? Greater than 50% of that consolidation traded through on a close. Yeah, retraced. And all we did was just return back into here to finally take out these highs here. Rejection block just above you. If we take out, now we've taken out the lows below it. So we're taking out these guys that want to go long. They want to see this continue going higher now that we've taken this out. Retail wants to look at this as support. They want to roll over and go back down. So we're clearing them out again. So we clean out both sides of the little engineered liquidity here above and below in that little consolidation. And now we want to come back and see some support off this candle here. Watch right there. Now you want to see that start going higher. That's the top of it right there. And I'll start pushing higher. Who would have thought, hey? Who would have thought that kind of precision is available? 51 of you just saw that. That's precision. So anyway, there's that's the level that we were looking for next, which was that next offering. Don't you love it when it's so precise? Work off that candle. It literally came back, gave it a kiss, took it to the prom, baby. Take me to the prom. Now we're looking for that rejection block above us. Now that we've cleared above that mean threshold, look for the rejection block and then start digging into that wick. $56 and one of them from the Middle East watching you. Nice. Abcrecio, are you from the Middle East there? If you're from the Middle East, welcome, welcome. T-Mass, just found you today. I like your calm demeanor and calling price. Well, thank you very much, sir. Holy. On the 1 minute, the body stayed under the 50% of the wick. I got short on that basis. Tight, trail, and out. Oh, you got short. No, as soon as it broke that high there, as soon as you see this and it does not take out this low, you want to see a significant break in structure. Otherwise, you're just returning back inside the range here. And that's an optimum trade entry reversal. You see it snap back, clear this out. You see this fair value gap. You've taken out lows. There's your reversal. And this candle completely runs through this one. So you're looking for this candle to give you the setup to continue going through here. It doesn't. It literally waits for this one, gives you one entry here before taking that high out, runs through the high on a close, comes back to that candle perfectly, and we were waiting for it to hit it. We were calling it before it hit it, and then finally ran through. So now we're looking for a continuation for rejection block 558. 558, my friends. 558, my friends. Welcome to the club, my friends. Come on over, join right in. Oh, I'll probably get a copyright infringement singing somebody's beer song. So high taken. Look at this spot right here. If we get taken on the downside on the close, come back, find support at this, I'm back inside this range again. And then I have my little magic boxes I'll put on for you. I like to see it just come back inside there, give that a kiss right there, and then turn around and go back. Don't go any lower. Bodies, look at that. Show me some love, and away you go. My coffee's going right through me again. Good quality coffee here. I'm going to go for a pee, as Derek knows. As soon as I do, that's when it decides to run, either up or down. We're still looking for our first 558. Nope. Watch this on the downside. It closes. Now you're looking for a short inside here now. Come back all the way up into here. See, short. I'm looking for a run back into hoo-ha, the magic bus. We go from here to here. Initially, that's what I want to see if we get to there. Oh, look at that. Where are we? See, reversal, gave you the reverse. Drop down below, come back inside, short. Looking for the magic bus. We hit that one. Next one is down here. Right up to here. Now I want to see us get through this level here. There you go. Yeah. Look at that. Look at that. Magic bus. Did you guys catch the reversal? Like that weekly fair value? Yep. Yeah. Hadi. That's my man, Hadi. You're learning well, my friend. Good for you. Bodies are still respecting this, so we may get a nice little return back into upper objective here. So keep your eyes on the prize, my friends. I might come back into this Fair value gap again. Taking out little swings. We're inside this range. We've hit that. I'd like to see that just roll over here now. Could go either way. That's what I want to see. Roll over. Start pushing through this level one more time. I like all the little probes that came down here. That's nice. I want to see that really give way now. Let's just start rocketing down. Come down with some intention. And we can start looking, I'll be looking to get back to 460. That's a nice little run on liquidity there. There we go. See how we broke down below it? Now we're looking for a range extension, which we got. We broke this low here. Now we're looking for this. We don't want to see this candle get taken to the upside. If it does, we're looking for a run back into that range. This small range here. Otherwise, I want to see this as support to go lower. Yeah, buddy. You got it right, my friend. Just keep coming. Just keep coming. Aye, you're a fine lad. Just keep it coming. Amazing. If we can take out that low, we'll have ourselves a bearish breaker, which would be nice to take on the trade off of. Agreed. See how this breaker now? See how this bullish breaker, that bearish breaker right there, we've got this one goes bullish, takes out this high. We have this breaker here that takes out this high. You trade below it, trade back into it for a short. Look at this one here. We've traded down below it, come back inside it, go short. Now I want to see if this, and don't forget, you can, oops, you can go all the way up into here. Your stop has to be above here, the top of the breaker. For me, it has to be above here. Just because if we break this to the upside, then I'm looking for more. I'm getting for another little run back into that range again, which I don't want to do. Otherwise, we want to just keep pushing back for 460. This is all good. I like it. Oh, man. Hoo-ha. I really need a 15-second chart. You don't need 15 seconds. Look, if I put this on 1 minute, you'll see it all on 1 minute, my friend. You'll see it all on 1 minute. Ooh. Ooh. We're on a dive. Okay, so here's the 1 minute chart. You've got a break above an old high. As soon as you see it trade below that, that's your level you're looking for. It hasn't traded below, those wicks don't count. So you want to see So then you look for this right here. You trade above, you break out a high. You look at this breaker that takes out this high. We have a high, a low, and a higher high. This becomes a breaker. That breaker is broken to the downside right there. See that one body trades below it? You wick up into it, you get short right there. You run for the lows, you pay yourself, pay yourself, pay yourself. And now you've got a new little reversal right here. So if you take out that high on the upside, you're going in the opposite direction. So that's your 1 minute chart. And that's what we were trading on earlier. That's what we'd be waiting for. Trade back into this. Excellent. So now the different thing is on a 15-second chart, you can see now we've got this swing point here. We've taken out that high. Look for this one here. So we could be retracing back into the range. We have to get below this level right here, that new day opening gap high. All we've done is just dipped into it, hit it multiple times, ran through it, created a swing. I want to see this close below here. And not just kick off of that and run higher. If it kicks off that and runs higher and breaks structure, especially on this candle, then we're looking for a run back into that range. If we trade lower, come back into it, find some support, and I would hope that that would go a little lower. You want to see the bodies. You want to see this give way, you know, roll over, come down. See how it's freezing up on here right now? You want to see a body pop through here, because the ideal entry for a long would be there if it trades below it. See how the wicks pop down? This gives me an indication we're probably going lower. See how the bodies are still respecting that fair value gap though? Wicks do the damage, right? If it trades through that high, I start to change my thoughts for temporarily inside a smaller range, like from here to here and there to there. You start pulling your fib tool according to that. And this is where your patience has to come in. You're looking for, is this going higher? Breaking structure to go higher? Confirmation? If not, this is just a return, run right back up into the mean threshold of this candle. And now I want to see that pop. There you go. Get down in there. See how it keeps freezing on it? We haven't got any bodies getting below that yet. That's what you want to see, is a body getting down there. There you go. 2 seconds. There you go. Now we're looking lower. Does that make sense to you guys? I hope you understand how that works. Can you explain a unicorn, please? So first level of distribution. So after you get this market maker So look for your original consolidation. Go on a higher time frame chart here. A unicorn trade, as I understand a unicorn, oh, God, my nose is super itchy. A unicorn trade, as I understand a unicorn trade, is you have a smart money reversal, low risk sell, and then you have first stage accumulation distribution, second stage accumulation distribution, and then boom. After second stage accumulation distribution is the best part. That's your unicorn. That's when you should see a distinctive slam and run right down hard. That's a unicorn trade. This is at the second stage of distribution that you'll see this big unicorn leg run down. And I hope you guys have caught that. I'm in a beast of a run here, so I hope you guys have caught that. We caught the run up, we caught down and up, and now we catch this nice big run down. So we're catching like both sides of this animal right now. So we're looking for all the way back into this order block, these lows down here at 459. That's how I understand a unicorn trade anyway. If we take a really need a 15-second unicorn, I'm in. I am in 952 candle. 952. There's guaranteed profits now. Now it's just zero stress. Let her buck. Let her buck and make you a buck, my friends. I'm locking in all my profits here. This is a nice huge rundown. Oh, hope you guys are in this. This is crazy fun. Let's look at the 15-second chart again. That's me out. Got a reverse here. We've taken out these lows over here. We've taken out these lows right here. If that was your original consolidation. for your market maker buy profile reversal. First stage of accumulation, I guess. Distribution. Second stage, unicorn. See how they get that big drop down after that? I do love that entry. It's so anyway, I hope you guys are picking up some dandy trades here. Profitable trade for those who shorted the top. Yeah, it's been making quite a distinctive profit run today. So I'm gonna make sure you hold your profits. Make sure you protect your profits, folks. Protect your profits. So for me, if you want to go long again, we're at the 10, we're coming up for 1040, 1045. I should see another little one more run below this low here. Now we've got this, see how this reversal's given us a chance to get long right there. You're inside this range, so pull your fib tool from here to here, 50%, 62%, if you use that fib tool technique I show you guys. If you don't, as soon as it pops below here, your fail safe is right here. If you don't know what a fail safe is, it's in one of my videos. I think it says fail safe on it. So ideally you watch right here. If this rolls over and drops below here, comes back, finds support at it, we're looking for these lows again. If this is your really nice entry now for the consequent encroachment of this, you want to see that start lifting up and getting above this level here now. Yeah, I don't see anything in here. Let's just watch, see if it gets through here. Profitable trade. That's exactly how you explained it. Yep. Caught Asian high 523 with London low. Target at 452 the short. Micros. 40 points over here. One and done. Thanks, Darren. Fabio, you're welcome. Do you have a percentage target daily for weekly on your trading? If you could share. I don't have a daily, weekly objective. Usually you wait for Monday to set itself up and then you can kind of get a bearing on your weekly. I think we're looking at getting back down, and I'd love to see it get back down in here. See now how we've closed below that? You're looking for lower prices now, and your stop loss will go just above that old high here. Now I'm moving into break even right away, just because I don't want to see that trade back against me. So I'm in it right there. As soon as it dropped below that, I'm in, looking for that low there. And I'm automatically in profit already. So just let that run. So I was taking a trade all the way down to here, got out, saw the reversal. It did not give me the reversal, gave you the false bull flag, and then kept coming down, gave me the confirmation we're going lower. And now I'm in a freaking killer trade again. Got out here. As soon as it came back to here, I took that run from there to there. That's what, 36 to, that's another 60 handles right there. If it comes back to this old low here, See how we got this reverse going on here now? So you're back inside this range. So for me, we'd have to get long up around here somewhere. So we'll kind of watch this right now and see if we get. And these are nice little runs today. Gonna make sure my other trades don't stay long. Good. See how we're coming back inside this range. So optimum trade entry reversal. You start looking for those as well. There's 62%. This candle's body. See how we've got this reverse? We don't get an opportunity to get in on this. We don't get an opportunity. Oh, we're here. So we're still above 50%. So I don't bother taking that trade. I want a discount. I'm like Derek. I want a discount. And don't give back your profits till you see something clean. Like, don't chase price here. So just wait for an opportunity for it to come back. Give you a clean entry. If we're going to go long, I want to see it break these highs here to go long. If we're just coming back to an option trade entry reversal right here, and all we've done is come back into these bullish candles here, and we start to get a reverse and driving down now. Don't try to pick a high. Just wait. Just wait. Right now, you got to think about this like a shark. If you guys are going into a feeding frenzy right now, if you've just had a couple of good wins and you're feeling that anxiety, that anxiousness about, yeah, I'm just a shark and there's blood in the water, you guys be careful, because this is where if you don't see a clean setup and you get caught, you go, oh, it's optimum trade entry reversal. Whoa, I'm going short, right? And it goes slamming short and you're like, I'm on fire. That's when I'm going to start slapping out my risk. I'm like, good. And then you think about how much money you've made and how much you can throw away. It's like dollar bills. I could chuck away a few here. I don't care. It's like, don't do it, man. So I like this reverse to here. Option trade entry reversal would be a nice option here. But I haven't really got anything here that supports a break in structure for this to be like, see how this is just above equilibrium of that small range or the range that we just created from here to here, and we're just sitting at 62. So if it is a reversal, option trade into reversal, that's fine too. There, now I'd like to see that just kind of leave from here. I wouldn't want to see that there's the 70% again. We just came back inside here to go for long. Now this, look. You see it? The reversal. I don't want to see it get above here now. See that roll over and come right back down. And if it trades through here on a close, then we're going higher. We're going higher. I want to see this provide some support here now. So if we do get a retracement now, I'm looking for a retracement of this larger range right here. Now that we've got a continuation going on, I'd like to see this as an upside objective. I'd like to see 50 to 62%. So look for more upside. And if we break this candle here to the upside and here, then we're definitely going to go much deeper into this range here. Digging back into this reverse here. If we get below this low on a close, then we could be going lower. And this, you've got this reverse, you're inside this small range here. So I now would wait. If I got caught on a low here, then I would wait for market structure break above or below, so you don't just get beat up inside this consolidation here, because one's confirming higher, one's confirming lower. You're inside this range here, so this could be just retracing back into here to go higher. So you'd want to see a structure break on the upside for sure. So I'd have to see this get taken here. All right, I haven't been looking at that. Sorry, D, I had to mute you. Got my market maker sell model in pay to wait. That's fine. Did you get short? Obviously, you got short if you're in the market maker sell. Good for you. We call that a banger over here. Brilliant day time to celebrate with some breakfast. Wow, I'm up $4,323 on 3 demo accounts thanks to your teaching. Thanks again, Darren. By the way, only trading 5 to 20 micros, copying 3 accounts. Good for you. That's what I like to hear, Stuart. Well done, buddy. on the demo account. Good for you. See, when you're in the middle of this range here now, and you could say one go high, one go low, get out of the range, wait for another setup here. Passes an evaluation off this initial reversal. Way to go, T-Mass. Not bad for a no news Monday. You the man, D. Be like Derek and go eat food. Yes, I am microtime. Yep. That's a beautiful little run down there. That's good. So now we've got this up. The 11 o'clock reversal. So for me, this is a bigger run back into that range, I want to see this high get taken. We're in the middle of it now, so I'm not going to give back any profits. See, we've taken these lows, reversal. Again, for confirmation of a reversal, you need to see this high get taken for continuation to the upside inside here. Otherwise, even on a 1 minute chart, I want to see that candle get taken to the upside. Yeah, it is a reversal. You do not want to see that low get taken right there. So just below that low, your stop is sitting here. I would move it up to here and make sure that that's getting worked right now. The fact that it's being worked as much as it is, I don't like that. You know, for a reversal, because you want to see a confirmation of a market structure break. You don't want to see just this unless you're looking at trading back inside this range. Then you buy here and you're inside that range and you sell 50, 62%. Do it again, 50, 62%. Do it again. And if it trades it back against you, then even inside that small range and you're on the wrong side of this and it goes down, you can still make money. Demo dollars, that is. We don't give out financial advice here. I am not a certified advisor, a financial advisor at all. I'm just an old retired paramedic, busted up fireman. That's all I am. We're just playing demo dollars, just coming here and showing you how to read price action. What you do with that is entirely up to you. These are all demo accounts. I see it right here, Hadi. But I would be careful you don't get caught. You want to see this candle get taken. Otherwise, that could just roll over. If it closes below there, then look for the run below. And on a 15-second chart, you want to see a run below here or here for this initial rundown. See how we've taken out these little lows? There's the reversal. You trade back into it, but as soon as the body gets above this high, like there, you just want to see it tap it and go, not come rolling over. You want to see that stay open now, right? You want to see this candle provide support, and it's not. It's just rolling back into small consolidation. We're hitting 11 o'clock now. So 11 o'clock, that 11 or 1050 macro didn't do anything. So you'd want to see it start to drop into the ideal entry right there. Make the move, go higher, or if it drops below, comes back in, find support, look for further lower prices. I want to see a double bottom or SMT push back into those buy stops. looks like we want to go lower. Yep. Lucky guess. So we traded through here. Going lower. Come back, find support at it. Going lower. So 11 o'clock, we should see another run on this liquidity down here. At 11. And then I want to see a reversal come off of here and then pull back into this range. Remember, it's talking about we want to see 11 o'clock take one more run below that low. This is where it does it. It takes a run on that, runs back into 50% of the range. There's a retracement from 11:30. 12 o'clock, we could take out these lows one more time and then run back deeper into that range again. And don't forget, we still got that liquidity above the market here still. Old highs. So just watch for a run below this low and see if there's a reversal. Volatility coming. London got just closed. There it goes. I'm waiting for a reversal for long. 23.21. I'd like to see it come right back up into the consequent encroachment of this. Leave a piece open, come lower. We'll come back for that in a bit. Oh, we gained 10 people this morning. We're up to 972. We're getting close to the 1,000 people. The 1,000 breaker. We're going to break 1,000 people this month. Look for continuation. Watch it run those lows. Smash that like button for my guy. Shaping up for a buy. Thanks, JP. Mark. Yes, sir. Good morning. Who's in the cell? I think we all took cells this morning and There you go. Look for a nice little run back into this regular trading hours gap again. That'd be nice to see. Oh, not regular trading hours. Back into this Wednesday's fair value gap first presentation. Now we've taken out that low. Now we ask ourselves, what are we going to look for? The lows are taken now. I'm looking for any opportunity to see a nice little reversal. This is Tim, Mr. JP. We could see that run all the way down now for the I do like that idea of running these old lows out now, right down here, and start running into this old low down here. It's just enough to come back and take out all that liquidity. It's beautiful. Let's just see this run all the way down. We have a fair value gap filled out down here still at 299. So that would be my overall downside objective if I was looking at 299 is my downside objective for the day. Right now. Making myself the way. Have a great day, all. Good for you, Dave. Good for you, man. Walk away. Walk away when you can. So you get above here. There's a reversal here. I'm looking for it to get above here now and break some structure in here and here. Just going to see if it starts to work its way up now. It's good. Now we're looking for liquidity above the market here and here. That's the 11 o'clock. You want to see this start to work here now and start to dig its way up a little higher. I'm moving to break even. We'll wait and see if that continues. So you want to see this candle here provide support now. Get above this candle, look for this candle on a close. If we can close above this one, look for this to provide support. Making myself step away. Same here, D. All you have a rest of a good day. Thanks, buddy. We'll see you later. It's good if you guys can have the discipline to just walk away when you've made your money. Walk away. You're happy to be content with what you've made. And wait for another setup tomorrow. Lion's share of the day has been well dug into this morning, so tuning in, abs. Find some support inside here. If not, these two candles on the downside, you're back into this. When you have overlapping arrays where this one can go higher and this one here can go lower, move to the sidelines, wait for something clean to set itself up. If it takes off, goes higher or lower, doesn't matter. If it goes higher, I want to see it take out this candle. We're already digging through this here. Not a good sign for the longs. We dug through it, came back, found support at it, looking for these candles to get taken on the downside. Looking inside this range here for 50 to 62%, then 70% out from trade entry. So you're looking from here to here. See, we're already at 50% off this candle. So body wick below there, going lower inside this range. 62, 70% is a fill. Often trade entry reversal. If we get back into here, also this fair value gap reversal. Consolidation, return to cam model 1, whatever. We got 3 different models there. So you can see how your one was short from here, one's long from here, and they're overlapping, one short, one long. Which one do you play? Neither one, man. Stay out of it. Wait. Otherwise you're gambling. And if you have the urge to hit the button, you're gambling. You're totally gambling if you think that that's either direction on a 1 minute chart. Now you might have a higher time frame premise that says I'm going lower, and you're fully supportive of that. Then I'd say great. You must be key enough of a 5 minute or whatever, but a 15-second chart. We're inside this small little range here right now, so we're doing nothing. So you don't have confirmation that you're going lower until we take out this candle on the downside. Right now, we're bearish inside this range, and yes, we could continue going lower. And right now, we are supporting a bearish move, but we're just bearish inside this range, and one's going bullish, one's going bearish. So I'd wait. And this is a 15-second chart. You see how the candles are getting really small now? Is this low resistance or high resistance liquidity run? What is time and price telling you? We're about to go into lunch hour now, so things start settling down and we start marking time, right? So unless we get something significant, a significant move, yeah, I like these lows down here. I like this as a potential run for the day. And even lower yet into the 299, I think I mentioned it earlier. But there's going to be a measure of retracement back on the people who've been running down, catching this run down this morning. There's going to be a measure of retracement back against them before going lower. If you're catching that off the 9 o'clock high. Ooh, let's go look at some other trades, shall we? Yes, we hit our little box. Now we're trading in it and through it. So I gave you Bitcoin going down this morning. So there you go. Bitcoin is going down. So now I expect Bitcoin to continue running for these lows here. And we're back into that old crap that's over here again. See what you get there. If we can come back, if we've just popped through here, find some support inside here and keep coming lower. There's nothing in here gives me a reversal for long yet. So I'd say short on Bitcoin on a 15-minute time frame, that is. E-mini S&P, that's going it's just inside this daily candle. 5-minute candle. Let's do a 15-minute candle. E-mini S&P. This would be a nice little retrace, you guys, for E-mini for 12 o'clock to pull back into this range and get back into this candle. I'd like to see that before going lower. We get back into this consolidation for CAM model 1 or 2 for a short. Ignore that wick. UNG, it's back up inside that. little magic box down there. I don't know why I keep calling it the magic box. The discount array. Gold has done a nice little reverse, breaking this low, found some support at that. Now I'm looking for gold to come back down inside this range. Inside that whole range there. I'd like to see gold get back into these 727 to 726. We're still in that daily fair value gap there. Sugar, it's keyed off of here. It's still coming lower. I'd like to see sugar take out these lows here. You'd see sugar come back into the mean threshold of this box I got here. Go lower. Coffee, still looking for it to go lower. In the barn, we're looking for it to eventually get down here, so we're looking for lower prices on cocoa. Breaker is lumber, and this piggy's doing nothing. We can get a return. If you can get gold to take a return back into here, that would become an area of interest for me, for see if gold could get back in here. I'll put it like that. We can get back inside that box for gold and then go lower. And oil. Oil did a nice little run this morning. There's the reversal. I was looking at that this morning. I thought, should I take that for a reverse? I want to see that get above this candle. It's taken out there, and now it's come all the way back into that candle. It's got a buddy above here. Or was this the one I was looking at? What are we looking at? 1 hour ago? So this would have been this one. Trade all the way back into here. Cam model 1 for continuation. Get down into a 15-minute chart. See if you can see a reversal down here. Lows taken. Reverse, come back inside, support. Reverse, come back inside, support. Inside that range. Hard to say right now. Hard to say right now in oil. We're right in the middle of this whole range here. You'd have to get above here. If you want to go long, it would have to get above here. Otherwise, looks like we're short. We're a little heavy right now. I haven't really got much for gold or for oil right now. I'm kind of flat. Can almost see both two different directions here. I can see support higher and support lower. So you're inside that range. One gives you a short, one gives you a long. One's finding support off of a long. And the way that oil's not really holding price, but there is lots of liquidity sitting above you. There's a gap above you. Yeah. I'd be trying to squeeze a trade out of that. No, I don't feel comfortable with that. Still sitting there. Wayfair is finally coming down. We expected Wayfair to come down. Reverse. I want to see this low get taken now. So anybody who was shorting, we were asked about Wayfair last week, and I gave you a short on Wayfair. We've got a nice little kickoff there, so we're coming back into this range now. Pull your fib from low to high, look for 50% and see where you, see if we get more support off these levels here. If you're buying Wayfair or shorting Wayfair, or you're using options to trade Wayfair on a short, you're selling calls in Wayfair, you're making some money now because all retail would have been buying into this as a bull flag. And if you're a smart options trader and you understand price action with the price action study that we go through with Michael, and you would see that that was a reversal setup, taking out a bunch of highs. We have a reverse. We've traded into that reversal. We've traded short. Now, if we take this on a close, which we are today, tomorrow you could see a return back into this candle and then run deeper into this range. In order for that to get long again, I'd have to see it close above this candle to go long, like a close. Otherwise, we're back inside this range. Bond auction. Where's bond? Well, give me the bond one here. Give me bond. What's the name of the bond thing? I don't trade bonds, so I don't know. Give me the bond one there, Chris. I want to see. I probably missed it already, but I want to see it before it takes off. Bye, everybody. I'm cutting and running. Kenny Rogers. Know when to run. Good for you, Joe Mack. Was doing some analysis over the weekend, and about 75% of either the regular trading highs or lows was formed between 9:30 and 10:15. Interesting. 5:20 to 5:40 was another key time. 15:20, 15:40. Yep. What's the bond market? Let me look at bond market. I don't know what the bond market one is. ETFs. Bond exchange. Oh, we'll look at this one. What the hell? Oof. I got nothing. 92.42. Anybody got a bond market ticker? Anyone? No one? TLT. TLT. NASDAQ. Yeah, you're looking for 91.96 to 91.72. My little magic box would be from 92.37, sorry, 92.40 down to 90. This is where my magic box would be if I was shorting bonds right now. I put it somewhere in here. And I'd look for price to get into that box. If this is the original consolidation and you have a market maker buy profile and a reverse, sell, first stage, second stage, continuation. Jeepers, man, this could really drop price. You could be really hammering down on this. If this is a next price, like, holy cow. It could be a sizable drop, my friends. That would be the next one. If we clear through here, I'll be looking for these lows, and then my next box would be down here somewhere. Who needs volume? That's all bullshit. I'll remind you, these are probably volume based, aren't they? I don't know. I'll stick with algorithmic ideas first. So that's my first objective. And if we get through that, that's my next objective. ZNC 2024, ZNC. ZNZ 2024. Going lower. Yeah. This is the box that I'd be putting in here right now. That's the box I'd expect to see it drop into. And it's dropping in there now. I'd like to see it get below that. If it does, then I'll be looking in around the 110 range for bonds. And he's like, oh, go back to the NQ, it's reversing. Give us a discount, hoodie. We want it right down in here somewhere. Get below this candle. That's right. I'll start turning around and coming back down now. I want to see it start getting inside this range. Can you take a look at GDXJ, Junior Gold Miners? Joe 128. I can do that for you, my friend. I can do that for you. That's where we want to see it come back to, right there. I've just taken a short trade off of this right here back into that range. So I'm already in profit. So if it comes back and takes me out, I'm all right. Yeah. I just wanted to see if I could get back into 50% or more. So take a piece off there, off that order block. Now I want to see that I run higher. It was just a quick 10 handles or something like that. That's good enough for me. This is kind of like Bitcoin practicing this weekend. It was super choppy, but keying off of key levels just to run to a 50% fib, practicing that stuff over and over and over again. I tell you, it pays off, man. Come into our weekend practice and you'll see how this stuff works. Just lovely. I like to see it key off of here now. Go higher. Sorry, let me get back to Jack or Joe's here. GDX. 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 J. GDX. This Vanek. Junior Gold Miners. Hoo-ha. Let's look at this delicious little one here. If you're in February looking for our reversal technique that we're looking for, I love doing these little reviews on stocks. So if you want a stock, you look at a stock that you're interested in. I don't know if you trade options, but I'm going to show you some option. If you traded options on these, just selling calls or puts, covered calls or covered puts, man, you'd be banking. So as soon as you see this reversal, it's taking out all these lows. As soon as you see market structure break to the upside here above this candle, you go, ooh, now I can sell shorts, covered shorts here. As it goes higher, you look for this candle to get taken to the upside, and then we want to see if that provides a level of support. So it trades above it right there, does not come back, find support. It literally stays open. We have an imbalance right here. And we take that high, we break it, so we go higher. Then you want to look for the next high right here. Gets broken to the upside. You trade back inside the imbalance. Go higher. If you were saying, yeah, you know what, I want to see this range get broken first, that whole range before you, like February, you got March, April, finally takes the high right here on that up close candle. As soon as we get a return to that candle, you go long. So you don't get it here. You wait. Comes all the way back right there. You tell me that some boardroom meeting at some miners' hall in some little hick town decided, hey, look, this ETF, all these guys decided right there on that day that that was it. Where the boardroom says, stop right here. Take no more orders, no more volume. We're going north. We're going to take this stock to the roof. Fundamentals, all that stuff. That day, that price, $39.87, suddenly it stopped. The boardroom, the guy hit his gavel, and that's it. Off to the races it went. You see this reversal, taking out this high, drops below, comes back up inside the reversal, leaves our little gap open here. We trade lower, takes out this low, this low, this low, comes back into an imbalance right here. So we've cleaned out a bunch of lows, come back to an imbalance, look for another return back into the imbalance above, looking inside the range. You've cleared it out, opened up, traded back into it, and went higher. Look for a reversal. This is the level you want to see. Trades below it right here, trades back up into it. You can get short there, or you can get short right there inside this level and this level. For continuation, you're looking for this imbalance down here. It actually gapped the next day below there, so you would have made tons of oodles of cash. If you were aiming for here and it gapped here, you would have got paid out even more there, because it actually gapped lower than your take profit. Equal lows are run out. Look for a reversal. Trades above it. You don't get an opportunity to get in on it. You're already up into a premium portion of that range, so be careful if you're looking for higher prices, because if you can't get in off of this right here, look for this one from that low to that high. As soon as you can get above that right there, trade into it. If you're looking at the larger range, make sure that your fib tool is, you're in the discount range, and you literally just caught yourself into the discount range before going higher to the breaker. Takes out this little low here, goes lower, comes back up inside that one. So as soon as you take this or get your long here, look for your first high, pay yourself here, pay yourself here, fair value gap fill, pay yourself. And it's taken out a high. There's a reversal right here. Trade below it, come back up inside it. Stop losses here, reverse. Trade all the way back down into the imbalance down here again, also inside that fair value gap there, or that gap in price, and off to the races you go even higher. So you break the market structure to the upside. If we can get support off of this candle inside here, you want to keep going higher, so you get all the way down into here. Dips down, does a little bit of wick damage inside here. Imbalance, trades above it. Do you get an opportunity to get in on it? Wait for this candle to get taken to the upside. We have a swing. Drops into it here. And you're just gapping up higher. So far, you got higher prices. So look at the weekly chart on that one. Rejection block. Right to the rejection block. If you get a retracement today or this week, look for a retracement to 53.38 to 52.75. And if it runs that, it can wick down to 51.98. You want to see this portion of this stay open if you want this to continue going higher. And then my magic box for this one, for upside magic box, would be somewhere around there. Around the $60 mark. Anywhere from 59 to 60 as an upside objective if this keeps running. And then you see how it acts inside there. If it rolls over and comes back down, and if it runs through it and keeps going, look for those old highs here. First, the rejection block up here at 61.96. Then take half the wick. Take that wick, the largest wick, put it into quarters, and then watch on the way up. If it breaks more than 50%, looking for that high. That's your gold. Miners gold. So even though I was on the wrong side of that, catching that small 50% run into here, pay myself right off that, even though I was on the wrong side, it came back to a level I was expecting to see some support, roll over, take this high on a close, that closed above it, came back, give it a kiss, and off to the races you go. I want to see that continue going higher now. Get back up into this fair value gap here at 423. There we go. I can do whatever the hell it likes. Took some more profit there. On my mini, it hit 423, right on the money. So my micro, this one's a little short. It's 424. The micro, it's 423. Now you want to see that go higher still. You want to see that provide support through that level. Getting inside this order block here now. I'd be comfortable in calling NQ reversal to early. Wait for confirmation. Out. It's a unicorn setup on NQ 1 minute chart D. Is this a unicorn setup? One. Money reversal. Cam model 1 entry. Yeah, it could be a, you know how somebody was mentioning yesterday about reading one direction? I'm really good at reading unicorns in a descending, a sell unicorn, a buy unicorn, second stage distribution or accumulations would be. So we have accumulation, we have a reversal. First, second, drive higher. Yeah. That could be a unicorn, I suppose. Take this high out here. I'd like to see this find some support here and keep going higher. There you go. Hit that fair value gap above you again. Markets are aligned for reversal, maybe lunchtime. Darren, I'm new to Telegram, just downloaded. How would I find you? Campione, you just go to the top of the channel today, up there where it says links, and in those links, under the description, you'll see of the channel. You'll see 3 different links there. You can go to Facebook, you can go to LinkedIn, you can go to Telegram, either one of those. Another profit taken. I'm done for the day. Way to go, Curryfish. That's a nice way to get some sleep. Catch some sleep. Catch some sleep. Good for you. Well, way to go. Sleep well. Oh, I might be done for the day as well. I'm going to take my profits and move to the sidelines. It's only Monday. We have lots of profits to make this week. Lots of money to be made. $11.30. See how 11:30? It's a key time where Michael talks about 11:30 being a time where price tends to make it between 11:30 and 1:30 for the next 2 hours, a retracement on the people who are trailing their stop losses behind, so that they make a measure of a run on that retracement. So again, your reversal was given to you this morning, CAM model. You've had both different directions and continuations as well. So I've given you all the directions this morning. And it's laser accurate, hey? You can see how freaking close it is. Once you see it, you can't unsee it, my friends. Does anybody else have another stock or something you want me to have a look at? That's that downside Bitcoin. We wanted to hit it, so it's down into our little box now. Below this one, support, push lower. We'll see how much we dig into this box here now. Remember talking about this level, you have to get above that level and find some support. You're above, found support, push higher inside this range. Make sure if that's your large range and you're in below 50%, you pay yourself on the way up, especially during lunch hour. Here's your measure of retracement from 11:30. Look for a run back up for the liquidity sitting above the market here. That's ideally where you're aiming for, but don't forget you got a fair value gap here, which has just been filled. That little one staying open, consolidation. You got to get above that consolidation and use that to leverage higher. So pull the holes out of the walls, put them in front of you so you get an idea of which ones to reach for. If it takes them on the downside, then you want to look for a retracement back into this order block here and here. If you trade below this level here, you're looking for a run back on these lows. And it's 12 o'clock, so 12 o'clock can do another little run back in on that liquidity below the market at 11:30, and then go back higher. Sugar's finally taken out our lows we're looking for. So if you're trading sugar this morning, you got the mother load. We're looking for this to take out these lows below us. It came back up into the order blocks open. And we're reacting off that flat. We're looking for these lows and down here eventually. So they're still retracting off that quite nicely. Flat and nothing. Gold, nice. Downside objective in gold, went through it. Or we're looking for an upside to get back into here. Yeah, wasn't it? I wanted to see it come back up into here. And it's up inside here. That's where we wanted to see it end up. All right, so we did get that return back up into here. And now you're looking for it to go lower. Look for a market maker sell model here if this next hour comes back up into this level, leaves this piece open, just comes back up and gives you an institutional order flow entry drill for a short, then you're looking back into this range and gold's going to start dropping for the week. If that's the case, now that we've dropped below here, I like that idea. Any measure of retracement back up into this to leave a portion open. If we can get back up into this session open and react off of that and keep coming lower, would be good to see in gold. oil. It's nice to see it starting to kick out of there. Again, I want to see it get above here. Still want to see this. This was good. Holding on that order block we mentioned this morning at the open. That's a nice sign. I'd like to see that just keep climbing up today, getting above Friday and Thursday's highs, and start using this for some support and look for that next objective, which is the mean threshold of the breaker. Don't forget the breakers provide a level of support. That's probably why we're getting this little bit of resistance here inside this fair value gap. So we ran through this candle, back through this candle, came back, found some support at it, pushed higher. All right, Campione, see you later. Yeah, everybody seems to be bailing. Gotta run. Thanks, D. You're welcome. Craig, Disney. Oh, Disney. My father-in-law invests in Disney. Watch this candle here. And then there you go. Now, if we get below, there you go. There, and you want to see that short from there. I'd like to see this roll over and come into this range here again. It's kind of one or the other. We either got a short to go low, or you've got this to go high. So if we start eating through that right there on a close, then it's going higher. See how it closed right on it? Going higher. So we use this one for support. You want to see that go higher now? Take out these highs. Disney, let me just check Disney for you. Yeah, it looks good. We have a reversal here. Trade smart beautifully back into that for a long. You could have bought Disney very comfortably at 86.64 for a long. Running for highs, looking for this objective here. You've got to get through this candle for a continuation. If we do get a support from here, I want to see 95.25, and I want to see that continue climbing higher out of here. Yep. I don't see any major reversal below Disney unless you get below this candle here. So if we get below $92 on a close, In fact, if you close below 93.71, then I'd say the chances are you could be revisiting this range here one more time. Otherwise, still higher in Disney. What about long term? Long term Disney? Yeah. Depends on where this week closes with Disney. If this week closes if this week closes above, leaves this open, comes back next week, finds support at that and pushes higher, I'd be looking for this range. Just don't forget you're in this small little range here right now. So you're already at a premium level inside this range. We're at 62. There's 70% optimal trade entry for a reversal. So if it just pops up in here one more time, it's that little imbalance that you see there at the optimum trade entry. If this guy does this and then slams right back down again, we could see this run right through. So I wouldn't want to see this candle here get taken. It's 50% of this wick. Just keep your eye on this wick right here. You want to see that candle's wick hold price above, 25% or higher. If it starts to trade into 50% close, then we're looking for this to be an optimum trade entry reversal or continuation, taking out the lows and potentially coming back down and taking out these relative equal lows below us here. If we can stay above this fair value gap, if that creates a fair value gap this week and you can stay above it and use it for leverage to go higher, look for these higher objectives like this imbalance order block. And if you get up on top of this order block here at 102, then you're looking for a higher run. So right now, for me, it kind of hinges on this little level that you got forming here right now on the weekly. You're welcome. This is where you can get beat up having all your money back during lunch hour. So move to the sidelines. Count all your cash up for the day. And the 10 a.m. short NQ trade, please, very slowly. Oh. Do you understand the whole fair value gap concept? Are you studying any ICT stuff, Craig? because this isn't going to make sense to you if you don't understand the terminology. Are you studying his stuff? Yes. Okay, good. Are you new to this stuff? Like, are you a couple of years in? Are you a couple of weeks, months? Where are you at? I'll try and keep it to whatever level that you've got. Just go slow. Okay. Okay, so we have between 9 and or 9:30 and 10. We give people the impression that we're going longer, right? So that's the 9:30 Judas swing. 10 o'clock. And if you caught the 9:30, like we're looking at 9:30, you see this reversal going on. And you go, wait a second. We're just getting down to this consolidation. Cam model 1 entry for a long. And you go, I'm not sure. I'm convinced. I want to see this cluster of candles gets traded through and then return to them. It returns to them right here. And off to the races you go. If you're looking at this consolidation, another cam model entry, trade above. This very next candle comes back in for a cam model 1 entry for continuation above this old high. We have a reverse. Trade down, come back inside this range. Pull your fib tool, run all the way back down to 52%, 62%. If you use my method for managing short range with a fib tool, if you don't understand all ICT concepts, the fib tool is a great way to manage your trade until you see a reversal. So you trade, you take out a low, you see a reversal, you close your trade off that you saw the moment it breaks this high. Breaks that high, you're out, trades back into it right here, all the way back into this order block's main threshold, continue going higher, takes out these highs, finds support off this candle here, goes higher to mean threshold of this candle, retraces back into this range, 50%. If you pull your fib tool, you'll see small little range, hit off the mean threshold nicely, reverses back into 50, just below into the discount range, back into this order block, and this is what you want to see break above. Comes back in one more time, gives you another option to go along if that's your choice. You take out old highs, you wait for a reversal. No reversal. We have old lows kind of taken out. We have a reversal right here. You trade above it. We're getting into 950 candle now, so we're getting into the macro, the 950 macro. So as soon as it trades through here, and this candle, you want to see it return back into that. It does, all the way back down into that low right there. It's where you want to be able to support it inside this. Hit it. Continue to the upside. Now we're going into the 10 o'clock. We're expecting some level of retracement after 10. We haven't taken out this low. We haven't taken out this low. We've just retraced back into this range. We went higher. Now we're at 1017. We have a potential reversal set up. We have a new high taken out. A new potential reversal as soon as these candles are taken to the downside, and that fair value gap is taken. It's taken out there. So if we can trade back into it for a short, you take it there. It leaves that open. So you wait for this candle to get traded through. It does. Trades back into it right here. You go short. You're inside this range now. My little magic box would be in here. You trade all the way back to it. That could be your exit, internal range of liquidity. If you're an internal range of liquidity trader, that's another model. You trade that, done. As soon as it breaks that level, it does, comes back in, uses that level to continue going lower. That could be your next model. You take out low, pay yourself on the way down. You see a reversal, but you want to see this candle taken out. So you know you're inside this range. So there's your reversal, and it trades back into that range. It's got to get above there for you to go higher. It doesn't. So if your internal range of liquidity from there to there, watch. And this is that same model repeated. As long as you can get in on a discount, which you can't, so you have to ask yourself, would you have taken that anyway? It's not a discount. Discount's below here. And that would have been literally right on that. You would have wanted that 50%er just for a run back up into this range. 79% reverse. It switches up on you. You want to see these candles get taken on the downside, get confirmation that we're heading in the downside direction. You break that low right there, that candle, you come back into it, find support at it, continue pushing lower. And now you ride it. It's easy to say that now, but you ride it until you get a reversal. And let's look for a reversal. No reversal. So you would have caught that right there for that reverse on the way down. Sorry, right here on the way down. And you're trading this, or you're looking for this little tiny fair value gap here. What does it do? It comes back up inside the consequent encroachment of that little gap. Leaves the last little tiny piece on. Or did it close? No, it actually comes back and fills it. We don't have a reversal. Here's a reversal right here. Body trades above it. Comes back to it. That trade from there to there is out. And you wait for this to get taken on the downside again. It does. It gets taken. You say, great, now we're going lower. Catch that one. If you want to catch that there. If you wanted to catch it on the reverse to here, you didn't get it. You missed it. It continued all the way down. See this reversal? Trades above it right there and goes boop, and literally gaps down, gives you the option to go in. You're back into this range here. Pull your fib tool again. That's the range. Now somebody might have argued and said, that's not the range. See the 50% literally on it right there. Start trading yourself back up. As soon as it hits the 70%, you take your portion off. You've already moved to break even. You've moved to 50%, hit 62%. Sorry, hit 50%, hit 62, move to 50, which is break even in this case. Goes to 70%, move to 62. So it comes literally up, hits you, and takes you out right there. That trade's done. Wait for the next setup. Nothing. We have an old high taken out. If this candle gets taken on the downside, we want to go short. So it takes this one out, comes back up. And if it takes this candle on the upside, you're on the wrong side of this. Your stop loss is sitting here. It's going to get taken out. It literally comes right back up, wicks through it, gaps down, then runs through. So as soon as you see it starting to run through, close your stop. It's on the way up, or it just comes up and takes you out. So you take a loss. No big deal. New high established, a new high established. Reversal, trades through the reversal, comes back into the reversal. You're inside this small range now, trading, takes out these lows. New reversal, trades back above it, into it, looking to go higher. Comes back down, all the way inside it. And you want to say, I want to get some legs, I want to get out of here, I want to get out of here. And it literally drops straight through you, takes out that sell side. So you have this old high taken. Oh, sorry, there's a little imbalances in here that I'm not looking at. That high's taken, imbalance. Trades below it, comes back up. Inside that one, wick. Your stop loss is sitting here. Finally ran the lows out. So you got this one to go high, this one to go low. Ask yourself, you're in that 11 o'clock reversal. Trades through it, trades back to it right here to go short, reaching for this box, the magic box down here. You hit it, pay yourself, comes back up one more time, gives you an opportunity to get in again for continuation, reaching for 50% of the wick, takes that out on a close. See that close below 50% of the wick, comes back up and into this fair value gap again for a short, continuations, because as soon as we trade below that, you go, ooh, now we're going lower. Give you one opportunity to get short. Down you go. Looking for a reversal. Here's your reversal right there. You trade back into it, small range. Wait for the next reversal. Trades through it right here. Comes back up inside it. You go short inside this range. Pay yourself. And pulling your fib tool inside here. And you've seen me do that a million times. And that's where you're sitting. Then we start getting into the lunch hour. Consolidation. Reversal. Here. Stop loss is sitting down here. Reverse. Stop loss doesn't get hit. Finally trades through this level. Through this order block. Takes out all these highs. Inside larger range. Reverse takes out this high. There's the reverse right there. Trade back inside it. Short inside this range here. Do you have 50%? Let's see if this hits 50%. 50%. So you get yourself in off this guy here. Short 50%. That's the one I just took. That small little profit here back to order block. Continuation to the upside. And that's why we're in what we're in. So does that help, Craig? You use fair value gap inversion, fair value gap, and consequent encroachment. And is that what I hear? CISD? CISD. What's CISD? Hope you screen recording this, Craig. True or false? This is a price action gold. Yes, it is. I tell you, this setup that I give you is freaking magic. It's true staying in price action. I can tell you every one of those directions and where they turned. And if I get caught off, it doesn't mean I'm wrong. It just means I missed it. But the price action's there. It's all available to you all the time, you guys. And you can trade profitable if you know what you're looking for. And that's why we do price action study every morning. We get in here and hopefully it makes your price action studies better. It makes your trading model more accurate, more comfortable, less stressful. When you trade now, you don't feel so knotted up because you can anticipate where a fail safe is. Where does price fail for you? It fails at this point, and you've got to be absolutely sure. You got to see it enough times to go, I know it fails there. I'm just going to close my trade. I paid for new information. I'm on the wrong side of that. I'm paying for new information to go long, paying for new information to go short. As soon as it breaks my failsafe, you got to know where your failsafe is and where to put your stop loss. If you don't know where that is, put your stop loss above an old high like everybody else. But if it fails, your failsafe blows, then you know your stop loss is getting taken. Because how many times have you been in a trade, you've watched it, and your gut's telling you, oh man, that's going to take my stop loss. It's going to take my stop, and sure enough, it does. That's your unconscious saying, I see something that I don't know how to articulate to your conscious brain. Your gut's telling you something that you've done the trade wrong. It moves to a certain point, you go, ah, fuck, this is going to go low now. It's going to take me out. Well, that's what my failsafe is. Your failsafe tells you when price is changing and heading in a new direction. It has nothing to do. I'm 100% drink the Kool-Aid with what Michael's saying. This is algorithmic. There's no way buying, selling pressure is turning it on freaking wicks I'm telling you about. No way it's doing that. Please define your word, your definition of reversal. A reversal is So we have a change in direction, we have a break in market structure, and we have a reversal. So when we break an old high, okay, so we broke this old high here. I don't like the flat one. It's not a really good example, but either way, well, we'll do it down here where there's a nice, we have this little low taken, we have this low taken, and we have a run back. So we've reversed direction when we break. We have a true reversal when we break market structure to the upside. Just a change in direction is when we get, it changes, but does not take out a previous high or the order block that initiates the run down into the, like for example here. For me, this is just a change in direction, not a reversal yet, until we see this fair value gap, this order block taken to the upside. Then I know it's a reversal because now I've broken market structure and I have an order block, a breaker, preferably, that supports a breaker inside a fair value gap. Go back through Michael's stuff. He talks about breakers inside fair value gaps are like bet the house on them, man. Remortgage your house. Not that you would. Not for demo money anyway. That's the reversal. So you have to break structure to the upside and you have to take out that order block. That for me is a reversal. Change in direction or reversal. Usually you'll see me go, here's your reversal right here. You trade back into it. Okay, so a true reversal is when you got the break in market structure with it. So a reverse in direction. So we've got this little fair value gap right here. We're reversing direction. The moment it changes, like Michael calls this, a change in the state of delivery, the moment it breaks this candle's high with a, or it would be this one, but this candle's high here because that's where the swing is. Oh, that's where the turn reverse is right there. Change in direction right there. So as soon as that's a change in the state of delivery, comes back to that candle's high and continues going higher. So if you're looking at the candle, which is candle 2, that initiates the swing, there's the swing, or sorry, here's the swing. This is the reverse direction, trade back to the order block, or trade back into the fair value gap, ideally is what we want to do to get long. And if we don't get that, we wait for a break in market structure to the upside or wait for a trade back into this, knowing that if we trade below that on a close, the potential is that we're going to go lower. Okay, so here it trades below it. So now you may go, nope, as soon as it trades back into that, I'm getting out of my trade because this could be going lower right there. So you get out and you go, now I'm going to wait because this could go here, turn around and go back down. I need it to break market structure to confirm that I'm going for a long. So this is just a simple reversal inside this range to trade internal range liquidity. That's all that is. A break in structure is a full swing reversal. So I should say swing reversal. When I say reversal, I'm quick for reversal at everything, like I call everything fair value gaps, and my language is not as precise as it should be. So a swing reversal is when you get a break in structure to the upside. So here's where you break market structure to the upside. You take out the candle, which is the breaker that breaks these candles' lows right here and creates the swing, right? So that's why you always see me say, well, this candle gets taken to the upside, I'm in. That's the swing with the market structure break. That's a swing reversal. Just a simple reversal is a reverse and change in direction inside a range. Once you get that, you're just trading internal range liquidity. But the moment you break that high to the upside, now you got a swing reversal. Now you expect to see that provide support. So you see it right here, breaks above, comes all the way back inside, order block right there. Hits it. And then now we have a swing reversal back to the order block and go. Does that make sense? I know I kind of jumped around a bit there. So one's a reversal inside the range. Another one's a swing reversal when it breaks the range, comes back in and goes. So good. I'm glad it helps. So you see how this is a reversal? We have a change in the state of delivery. So as soon as we get below this candle here on a close, there, we have a reversal inside this small range here. Now, can you get inside it? No, before it hits the 50%. Now, do you want to chase this down? That's up to you. That's whatever your damn model is. I don't care. But that's not, there's nothing in there to get in. If this wicked up to this right there, I'd say, yeah, take it short. Put your stop right there. Because if it takes this high out, like we said down here, right there, remember, see, when it trades below it, then we go, oh, we're on the wrong side of this. Wait for that high to get taken. So you got to have the patience. Say, oh, I missed it. No, you didn't. You just, oh, you missed it. No, well, wait a sec. Oh, yeah, I guess I can get in, right? That's the patience piece right there. And how many people have that patience to recognize, I wanted to go long there. I went out and it went long and you went, shit. No. You're not sweating this. You're just going, okay, I'll wait for the break in structure and then a reverse. And then I'll put my stop below this low right here. So that whole wick becomes my important thing. I don't put my stop down here anymore. It becomes here. I just want to see that. If that holds well, it should supply some support. And then I want to see it get above this guy here because this is the swing. That's the reverse, a swing. And now here's the reversal right there. You trade below it, swing reversal. Trading back inside this range now, 50%. You hit the 50%, you're done. Move your stop loss to break even, take half your trade off. It comes back, takes you out, and you go, ooh, what did it trade back to? A logical level I wanted to see support. So not only did you catch this little run, or you missed this run up, but you caught the run back down, and then you caught the run back up. You see what I'm saying? If you're smart, you say, oh, I lost money on that going up. Well, here, you catch it on the way down. Now you get it precise on the way up. And the moment it breaks that right there to the upside, you go, I know, like it did down here, the moment it breaks this right there, look at the low on this candle here. The low open on that candle is, or no, the low, we'll take the low, 37975. What's the close on this? Or the high? 38. So this one is just slightly lower than that. So that one closed just above that. Then what does this one do? Look at the low on that one. 3795. Low on this candle. 3975. Perfect. And then left. That's precision, my friends. That's how I look at that, as a level of precise. Literally one tick or two ticks above, one tick above, came back down on it and left. Now, you may not look for that level of precision, but I certainly do. You got the reverse, you got a swing, trade below it. You don't get an opportunity to get on it, so it's a swing reversal. So you go, okay, now I just wait. And if this trades back through here, which it does right there, trades back into that fair value gap right there. I'll draw it out for you. Right here. The moment it trades above it, trades into it, I like it. I'm taking it long. And you see how it doesn't give you a full fill on the consequent encroachment? Doesn't hit it. That's sign of bullishness for Michael, and off he goes. I guarantee you Michael was adding more right there. If he was in that trade. That's the logic. Right? And then you say, oh, I've missed this run down. No, you didn't, because it did not break market structure to the downside. So you're just trading internal range liquidity, and you couldn't trade internal range liquidity. You didn't get your option. You didn't get your opportunity to get in. Go to a 5-second chart. See if you can see that at 10:45. Let's look at that one at 10:42, a 5-second chart. One of our other guys loves to trade. Was that, what did I say it was, 10:42? Ah, damn it, I don't remember where it was now. I should box it out there. 15-second. I don't even know where the hell I was at. Was it 10:42? Or was it 11:42? 10:42? I don't know. I've missed it. Anyway. You get my point. I am the high hog at the trough today. I talk really fast. Sorry. When I get excited about it, I get super talk really quick. So let's stay in the chart here, Craig. Okay, so 10:45, 10:46. We see this reverse right here. See that? Literally trade above it. Pop. You get to pop on it at 10:46. You catch the ride. Inside this range, you catch the ride up. And then all of a sudden it takes out. It creates these little highs here. Then it takes them out and creates this little reversal. Trades below it right there. Trades back into it. And you aim for this range. So you go bloop, takes that out. You pay yourself. Now you may go, I don't want to trade that. Don't. I'm just saying why it goes there. It runs the liquidity out there. And it ran all the way back into this level once again. See that? Right back to that old fair value gap again. Hits it. You go long again. We have a reversal, taking out this low. This reversal here, you want to see a body trade above that? It does. Does this wick come down and give you a chance to get in? It does not. So you wait for this candle's high to get taken out. Now you ask yourself, I'm inside that range. Do I want to buy at a premium inside that just to get this reversal? Hell no. You wait for a change in structure, wait for something else, either that new high to get taken out or wait for a nice little discount down here and see if you can get anything. You've got a high here, reverse, look for a reverse back into this range. That's a discount or premium that you want to sell at a discount. See that little reversal right there? Trades below it, comes back up, trades through it. So you may go, oh, as soon as it trades through it, I'm out. The stop loss is sitting here, literally came back. Oh no, sorry. It traded back into it. You went, great. Now I want to go short. It trades back up, comes all the way through it and takes you out. You're out of the game. So now you wait for a break in market structure from the downside or wait for the upside. So you wait. Here's your downside structure. You may stick around inside here, play a few more times. You're just going to get beat up. Rule is wait for that's my rule is now wait for a distinctive structure break. So there's the structure break. Trades back into it. Now you get back in alignment with the order flow again. Does that make sense? You got beat up right there. You take your loss, you pay your dues, you take your chances. It just trades right back to that order block we're looking for it to get through. Didn't. And you're looking at that range. You're paying for a premium. And you want to see this go down into a discount now. And it literally came back and took you out. And it came back and filled that fair value gap above you. So here, when that fair value gap hasn't been filled yet, or that imbalance hasn't been hit yet, you may be asking yourself, is that a valid place to go? Here's the reverse here. The moment we trade below it, we look to get short, right? You came all the way back up inside it again. So there's overlapping structures that say one can go lower, another one could go higher if you could get up on top of this fair value gap and that order block. This one here. So you can see that how you really have to look at each one of these and how they overlap and where they are in relationship to each other inside the range that we're talking about. I'll try and slow down, Craig. I feel like I listened to Michael on 1.5 really, really fast. And then when he starts talking about something that's good for me, I just slow it right down to normal level. but otherwise I go 1.5 because we just got a 4-hour video. A lot of it is, he has his little rant, so I appreciate that. Now you may go, here's the reverse, wait for it to trade through and below this low. If it comes back into that level again, I want to get short. So it trades through that low, good. Comes back up inside that level one more time with perfection, and then goes lower. But that's a consolidated market. $10.45. Well, how do you catch that bounce at 10.42? How did you catch that bounce at 10.42? 10.42. 10.42. This bounce, 10.42, right here. So here's how you look at it. See how this reversal goes here? You go, oh, I want to go, if it comes back into this level, at the moment I break that on a high, it comes back into it, I want to go long. So you go long inside this range. So ask yourself where you are inside the range that you're trying to capture. See that? You are above 50%. So if you don't catch this right here, to go long, so even though I see this, I'm going long. So if we just use this reverse direction and we get in on it, and as soon as we hit 62%, our stop loss, which is sitting way down here, comes instantly to 50%. You pay yourself at 62%. It comes back down, takes you out. I'm out of the trade. I'm done. Now, if it trades below this level on a close, which it does, we're going lower. Trades below it, comes back up, doesn't give you an opportunity to get short, and goes lower. If you miss it, who cares? You're on the wrong side of it, and you managed to nibble one little piece out before it came back against you. Otherwise, your stop would have been taken if you would have been holding out for the long. That's the rule. That's my rule for using a fib tool. The fib tool is an awesome way to catch it, and if you're wrong, and that 50% gets hit, that's the instant move to break even, because if you're wrong, and pay yourself at that level, because if you're wrong, your stop got hit. And if you don't have a fail safe and you don't use my rule for using a fib tool when you're trading internal range of liquidity, especially if you don't know what you're aiming for on the inside, then you're asking for trouble. And that's my rule. If I break this on the downside on a close, and if I come back into it, I can get short on that using this as the support. My stop loss would go above here, not here, because I wouldn't want to see that get taken. If that gets taken to the upside, then we're looking for further upside, which you heard me reference again when we were on our way back up. It had to break that level. So if you miss it, who cares? You wait for the next setup. So it takes this low out, and here's the next reversal. It literally opens, it closes above it, opens on it, comes down, gives it a kiss, and you go off into your internal range liquidity again. And you trade 50%, 62%. If you get an opportunity to trade the same trade over again, you get to do the same trade all over again, internal range liquidity, 50, 62%, pay yourself, move out. I'm wrong. You wait till you see a reversal. This has been taken out now. I see a reversal here. Do I get an opportunity to get in on that? I explained it, and here's where I went wrong. Here's the reversal. You got this. Oh, I'm going to explain this. I can see why this is wrong. You wouldn't have got hit here. Here's why. Listen, watch very carefully. Watch very, very carefully. I will show you why. Let's just assume that we took trades doing the same stupid rule over and over and over again. Okay. It trades below this. You're waiting for it to trade back up into this. Oh yeah, no, you would have been taken. If your stop loss was sitting here, like this, it trades below this. Ideally, all I'm doing is trading internal range liquidity. So from here, look at this. From here, that's the spot you're aiming for, and there, right there, right? So 50% is right here. That's swing high, swing low. That's the small little range. You're almost right in the middle of your trade. So you'd have to literally get in there and trade to there to break even, aiming for here. And you're scaling out on the way down. Do you want to trade that? You wait for structure break. This candle here to get taken to the downside. It takes it out to the downside right there. Right there. Comes back up. Inside this order block to go lower. Taken out low. Pay yourself. Because now you've got this range that you want to be trading in. So if you go from here to here and there to there, you trade back up. You're above the premium. So you're buying a premium and selling it at a discount. So as soon as you hit 50%, you move your stop loss to break even. 62%, move your stop loss to 50. It runs all the way down to there. So you're chasing this thing down. So you get 60, 70, 78, 88. Your stop loss is here. It snaps back, hits you, takes you out. Then you go, wait. I'm going to wait for a new market structure break before I get back in again. We have a swing. You're looking at this one here. So you trade above. Do you get a chance to get in on it? No. Do we have a trade above here? Yep. Traded above. You here. You get an opportunity to go long there. Inside this range, ask yourself, do you want to pay a premium? You're above 50%. Do you want to pay a premium to try and go to mean threshold, rejection block, old high? It comes back all the way through you and it would have taken your stop loss out. But that's your decision whether or not you want to use this reversal now. You got to get a discount. It's got to be in here to trade internal range liquidity. If you wait for that, you're already above 50%. You're wasting your time trying to snap something out of that. If you did, you'd literally have to trade to the mean threshold of that candle to try and get yourself something out. If that makes any sense to you. You're welcome. And that's on anything. What I've just showed you there is gold. It's gold for any asset class you want to trade, commodities, stocks, ETFs, absolutely anything. Just look at it, study price. This is why Michael says a study price action model. You got to study it every single day and you'll get better and better at it. And when we do Bitcoin practicing on the weekends, this is all we practice. And I just do it on demo accounts and trade Bitcoin on a weekend. I think I did I did $5,000 in one day on Bitcoin. And that's doing, I think we did 30 some odd trades, literally practicing inside, outside, inside, outside. And it wasn't about the money. It was about the practice, which is all about what you have to practice. I don't know why I say 5K, because some of you are impressed with money. You should be impressed with the price action. And I was trading maximum 1 to 7 lots. Mostly ones. Mostly ones. You see it, don't you, Russell? You see the magic? We are 25 people away from 1,000 subscribers. Isn't that awesome? Just over a year, We've been doing this when we have almost 1,000 subscribers. Love it, love it. I appreciate you guys spending your time with me. I appreciate all of you spending your time with me. Thank you so much. I hope I've been able to give back to you guys, and you've been able to get something out of this. I know Stuart's making a killing on his demo account. Wink, wink. Russell is young. Looks like I can trade MBT on Ninja, which if futures Bitcoin. So I'm gonna try trading with you guys on that. Just find up something that anything that gives you a demo account on Bitcoin, and I'll show you how to trade it. It's fun to trade on a Sunday. Saturday, Sundays are a blast. Consolidation. Come back, give this a little kiss. It's a cam model one there. If you can get an entry on top of that. Not that you would take this trade during lunch hour, but because that large range right there, you'd have to be looking for a discount to trade at a higher fair value gap imbalance. Cam model one would put you right here. Saw that order block again. I like this little displacement candle above. See how we've coming back into it now? Hit the old highs. Smack off of that. If it just starts driving up higher, if it doesn't and wants to give this little consolidation or one more little kiss first, it'll come into this candle's open, and we should see a hit back in here. Consequent encroachment staying open. Ah, that'd be beautiful. That'd be awesome if that stays open and keeps running now. Doesn't quite come down and touch it. Just leaves that consequent encroachment open. Look at that. See that? That's a good positive sign for a strong bullish run. And you want to see that this order block hold price and run higher. You don't want to see it revisit this down here. Call it a day. Be safe, Hadi. All right, buddy. Thanks. Take care. There you go. Now the high's taken. Pay yourself. See, positive sign. Michael's been teaching this. Did you pay yourself above that high? Small little run. That right there was 46, 52, 6 handles. Rejection block doesn't even get hit so far. We have a swing high imbalance. We lose these on the downside. We're coming back for these lows. You want to see that push higher now? Like lots of highs, equal highs above you now. These are all taken. Quick stop run or a continuation. Oh, I think that's going to be it for me. I haven't had any breakfast yet. We're coming up for lunch hour for me. So I might call her quits for today. Thanks very much for tuning in, you guys. Appreciate it. It's been 4 hours with you guys this morning, so thank you very much for that. I will see you guys bright and early tomorrow. House Monday. We got some money on Monday. It's big money Mondays, and now we're going to see if we can catch a little something tomorrow. I get a better idea of where we're sitting in price after Monday's price action, and we'll see if we can start reaching for some big highs again on the, yeah, there's stuff above us for sure. So anyway, let's hope we can get more upside. I will see you folks tomorrow morning, bright and early. I'll see you then. Thanks for tuning in. If you got friends that are interested in learning this, or you haven't subscribed already, subscribe to our channel. Hit the notification button. It'll let you know when we're on and ready to go. And I'll see you guys tomorrow morning. Take care.